Jenny Horn, markets correspondent here. We're talking a couple earnings names. And last night after the close, Jenny, Live Nation, not surprising, the stock was doing pretty well after these results. Concert tickets, they're expensive, Jenny. Really expensive at this point, right?
I know. I was joking yesterday when we were previewing this name. This is actually one space that maybe could use some more regulation, because I feel like it is a crime the way a lot of these ticket companies, I mean, like this is the owner of Ticketmaster, is really right now unfairly gouging their customers. And I mean, it's not even necessarily the artist's fault, although unfortunately they do take a lot of heat for that. Their CEO did mention they have a jam-packed 2025 summer concert schedule with big names like Coldplay coming. So that's definitely a huge revenue driver to look forward to more in the long term. However, there was a lot to like about this report, frankly, as we did see results that continued to, please the street. Already high bar that was set forth. We saw revenue of around $7.65 billion. That did slightly miss the mark of around $7.75 billion on overall earnings that came in around $1.66 a share. That was slightly above what we had been expecting. Operating income was around $640 million in the quarter and $910 million on an adjusted basis. They said third quarter did mark their highest ever concert profitability, with adjusted operating income up 39%. They did also sell around 144 million tickets for their 2024 concerts throughout October, which was up about 3% year over year. They did also highlight that transacted October ticket sales for Ticketmaster specifically were up 15% on all ticket volume and was up about 23% for their concert events, and noted that they do expect the sponsorship commitments for the year that have been booked, sponsorship revenue was up about 6% in the quarter. So again, a lot to like. And their president and CEO did say they wrapped up their most active summer concert season ever. Their pipeline has never been bigger, he said, and brand sponsorships are accelerating, while operating income should be impacted by some one-time accruals. They're pacing towards double-digit AOI growth this year. And as they look forward into an even bigger 2025, at least the hope is there, that they have a larger lineup of stadium, arena, and amphitheater shows for fans to enjoy. So momentum, as far as their president and CEO is concerned, is continuing to build here into the new year. Again, I think that it's no surprise to anyone why this company is making so much money when you have concerts going for upwards of $1,000. But I also have to imagine that the Taylor Swift bump helped out here, because the Eras Tour did just wrap up here in the U.S. Now it's in Canada, but that has been such an expensive but hugely popular tour.
Yeah, I knew you were going to bring up Taylor Swift.
How could you not?
I knew you were going to bring that up. But part of, one of the big issues that I have is why nobody else is getting into this arena as far as ticket sales, because it seems like it's pretty lucrative. But when you look at the pricing, I think that's one of the key things that consumers have at this point, is where they were doing that surge pricing during some of the concert ticket sales. I know Oasis, who's going to do a world tour, they were saying that, like, if there were a lot of people trying to get tickets, they were raising prices based on demand. I mean, that just seems like it seems like a good business plan, but at the same time, the pushback's going to be pretty significant, isn't it?
I know. It makes me furious, even when you're going to look at, a game, for example. Like, Bears tickets are so expensive because of the fees. And it's just like these various concerts, are so expensive because of these huge, huge fees that you get somewhat as an afterthought. But unfortunately for us, and fortunately for them, like you mentioned, it's a good business model because supply demand. This is like basic economics, because people are willing to pay these prices, especially for some of these headline tours, that they can just keep raising the prices, unfortunately. And there's still a market for, upwards of, like, I've seen ridiculous amounts spent again on the Eras Tour, but people are willing to pay it.
Yep. Anything about experiences, and hey, I'm a concert goer, but those fees are just ridiculous. We'll continue to watch that, but the stock hitting all-time highs in the pre-market. Another stock that's hitting 4 or 2-year highs is Shopify post earnings. They expected a big move as far as the option market was pricing in, and it's beaten that to the upside, trading about $107. How was this report?
Yeah, I was a little bit nervous about Shopify, just given it's expensive. It trades at a pretty lofty now valuation, and we were pretty much at highs yesterday. So to see results that were able to continue this nice momentum, I think is a huge win, and goes to show it's not always about how relatively expensive you are on a forward basis. It's not always about where you're sitting as far as your price, you can still continue to go higher, and that's been the case for Shopify, as they did highlight the continued discipline of balancing both future growth investments as well as operational leverage. Shopify did look primed for another pretty nice post-earnings beat this morning, as their latest report did show some upbeat revenue as well as progress on their bottom line. So we did see shares popped as much as 14% this morning, coming after about a 18% gain in August when they reported their second quarter. So this name has right now a nice back-to-back history of surprising to the upside as far as the market reaction is concerned. We did see they logged about $2.16 billion in revenue. That was up 26% from a year ago, and also did pretty handily beat expectations. Now for the fourth quarter, they are calling for revenue in the mid to high 20 percentage points relative to a year ago. The estimate was implying for just below 23% guidance as far as revenue. So pretty much in line, slightly above what they had been expecting. But in the third quarter, we did see gross merchandise volume was up, pretty substantially above expectations to around $69.7 billion. And while Shopify did bulk up on things like staffing and logistics capabilities, they've actually been able to take a more cost-efficient, measured approach now, and it helped their financials. They did post a net income of around $828 million. That was up from $718 million a year ago. And excluding some of the adjustments made in the quarter, they logged $334 million in net income, which was almost double what we saw a year ago. So yeah, it's hard to find what you wouldn't like about this report. Free cash flow did rise pretty substantially. That's been a theme for most of these tech names. But again, high bar, and they were able to pretty nicely beat it here, as we're sitting at around, set to open at highs here for the year.
Yep. Nice pop here on Shopify after beating those earnings estimates. All right, great breakdown for us. Thanks to Jenny Horn, markets correspondent here on the network.